Hey there, Wealth Press subscribers, viewers, traders, and investors. I have a special guest today. Ms. Beena Goldenberg joins us. She's the CEO of Supreme Cannabis. Beena, welcome.
Well, thank you for having me.
Sure, Beena. So, Supreme Cannabis is probably the company I've spent more time with on site in Kincardine than any other company. And I'm not sure when you took over as CEO. Can you give us a bit of background about how you came to be CEO of Supreme?
Sure. So first of all, I joined Supreme back in April, so 10 months, and it feels like a lot longer. It's an interesting sector, lots to learn, and it certainly is faster paced than many other sectors I've worked in.
Sure.
In terms of where I came from, I spent 30 odd years in the CPG industry, but my last 15 I spent at Hain Celestial. Running the Canadian portfolio of products, so natural and organic foods. And what I liked about that space was every year more and more consumers would come into that space wanting to eat healthier and be healthier. And so you had this tailwind of interest from consumers, and it was an exciting space to be in. So as I moved over, I didn't want to go back into CPG that was sort of stayed and pretty much stable. And I wanted to continue to work in a sector that had that interest by consumers, that would have that tailwind of more consumers coming in. And cannabis just fit really nicely in that spot, recognizing that you had that movement from the illicit market to the legal market, but also longer term, the opportunities of growth that would come in that sector. So generally happy about picking the space, but Supreme in particular, what I liked about Supreme was the 7 Acres brand, an award-winning brand. I've worked in CPG. I'm a believer in brands. I'm a believer in differentiating brands, and it really is the foundation. If you've said you've been up at our facility in Kincardine, you know we stand for quality of product, and that's what 7 Acres is all about. So that attracted me into the space, and I'm very happy to see what we've been able to do with the business.
Sure. Yeah, I'm a big fan of the 7 Acres brand myself, having consumed a fair amount of it. Okay, so coming from Hain Celestial, then your background is in companies that make money.
Well, listen, I've been in the CPG business, and my background has always been as an operator in companies that have to make money. Again, it's sizing your infrastructure to your revenue with the focus on generating a profit. That's what business is all about. So certainly steps were taken even before I joined Supreme, but the right sizing of our infrastructure, was really foundational to where we are today and how we're performing today. At the end of the day, I think the cannabis industry started, and I wasn't there at the time, and perhaps I might have made similar decisions, but it was built based on much larger forecasts and expected revenue, and overbuilt to the revenues that companies had. I think really I'm looking forward to continuing to build our infrastructure as our business builds, as a responsible business leader and driving a sustainably profitable business.
Mm-hmm. And your most recent financial reporting for Q2 2021 certainly reflects that. Positive adjusted EBITDA of $3.6 million, net revenue of $18.3, 54% growth of net revenue Q on Q. What changes specifically did you have to make to turn that ship around and get it going in this positive revenue direction?
Right. Well, I will say to you, some of the EBITDA trajectory has been happening over the last couple of quarters. We've been exercising much stronger cost control, working on, like I said, right sizing our infrastructure, and then driving our focus on recreational revenue growth. So building not only our 7 Acres brand and expanding our distribution and retail, but also building out our portfolio. So moving from just flower offerings, expanding to pre-rolls. 7 Acres is the number 5 brand in pre-rolls in the country. We added into concentrates, we added a 7 Acres flower rosin and a Highway hash. Highway is our value brand, but we came into the market through a concentrate, and that we are now 3rd in the market in concentrates as a company, and the number 1 PAX player in the company behind 7 Acres. So we've expanded our portfolio to add other items besides flower, and I think continue to drive that traction in our market share.
Sure. And your focus has switched a bit to exporting medical cannabis to Australia and Israel. How did that come about, and how important is that going to be to your revenue going forward?
Right. Well, our relationship in Israel, we have a relationship with Breath of Life Pharma. And this has been a relationship we started about a year ago. We've had 4 consecutive quarters of shipments to Israel, each one volume a little bit more than the previous quarter. So continued growth. And it is an important part of our portfolio. It's a capital-light way of expanding our reach globally without having, and leveraging the quality products we make in Kincardine internationally. So Israel is a cornerstone of that business. We expanded this past quarter into Australia, and we'll continue looking for medical opportunities through our Truvera brand out in international markets. But in terms of overall focus, I would say, our domestic business is always going to be our core focus. Our recreational business, of the larger part, and it's where we've turned our attention to. And yet we do have some deepening relationships with B2B partners on the domestic front as well that have continued to help us drive that 54% increase in revenue quarter.
Mm-hmm. Do you have any plans to expand into the United States?
So that question is the top question everybody's asking these days. And the answer right now is not currently. Our focus is on domestic. Really, there is a Canadian market here. There's great opportunity to capitalize on it and continue to grow here. And, continue to explore the opportunities internationally through our medical sales. However, look, no one could ignore the U.S. marketplace. It's a large market just south of our border. It's something we're keeping an eye on, potentially an opportunity down the road. But right now, it's not our focus. Our focus is to get our business operating effectively here. You will have seen that we did a recent equity raise at the end of January, which bolstered our balance sheet, gives us a little bit more optionality. We definitely didn't need the cash right now, but we did it to provide us opportunity in case the right kind of opportunities come up. So that optionality is out there, and given the backdrop and the interest in the cannabis sector, if there's more opportunities, I can't say whether we'd look to do more raise or not, but it's always good when the backdrop is there to bolster your balance sheet, and then if the right opportunity comes by, we could capitalize on it. So long way of saying focus today is Canada, but we're not going to rule out opportunities down the road. Sure.
So with your most recent equity raise, your outstanding share count is above 600 million. Do you view that as a challenging development in terms of using your company's equity as currency in potential future acquisitions?
You know what? I think our focus is always going to be on increasing shareholder value. And certainly the equity raise does do some dilution, but it's setting us up for future growth. I think this is where we'll see the value creation and the benefit to our long-term investors. Really having the opportunity to not only capitalize on other opportunities, but also to invest in our brands and differentiate ourselves. Look, we know that the market will evolve. There's more and more players who want to move away from that value segment to get into the premium segment. We're well positioned in that premium segment with our 7 Acres brand, and we want to invest there and get the loyalty of the consumer there. And so having the right optionality on our balance sheet that we could invest and take advantage if there were, for instance, regulation changes or accessing more people in store as the COVID restrictions lift. There are ways to build brand loyalty and increase shareholder value. And that, to me, at the end of the day, whether it's 600 million or 500 million, our job is to do that.
That sounds great, Beena. Okay, we're going to leave it there for now. I'd love to continue this conversation with you a little bit more in the future, but thanks very much for joining me, Beena, and best of luck.
Well, thank you so much for having me. I look forward to talking to you again